Hey guys, it's that Dividend guy coming at you with another Robinhood portfolio update. Happy Thursday. Hopefully everybody's having a GGD, a great green day in the market. You know, I always wish the best for my viewers and subscribers. And speaking of subscribers, guys, we're sitting at 519 right now. Let's get that to 520 before the weekend. I think that'll be pretty easy. I've got a couple of portfolio updates that I have set up for you guys already and a couple of list videos. So, got more content coming out, and I'm excited to see the channel growing. It's pretty sweet. So we're going to go over the overall portfolio performance. We're going to go over the buying power, the individual stocks, and then, of course, the stocks on my watch list that I've added. So for today, we are up $86.41, up 0.26%. We were up a little higher than that, about 0.67%. We were up above 33 at 33,176, but now we're up about 33.29, which is fine. Not worried about the fluctuation. So for the week, we're we're down 290.81, about 0.87. For the month, we are up 825, up 29, up 2.56% for the past month. We're up $3,543.04, up 12.02% for the past 3 months. We are up $8,099.58, up 32.49% in the past year. And then all time, we were up $7,359.75, up 28.67% since April 13th of 2018. So, guys, even with the big drops that we've had last March and the other one that we had in October of 2020 due to the oil issue, we're still up overall, which just proves long-term investing really does pay off. Time in the market beats timing the market. That's really important, because I know a lot of people probably sold out right here or sold out there. Like, there's always a reason to sell. There's always a reason to be uneasy about being in the market. But long-term, short-term fluctuations really don't matter. Your stock should outpace and recover during any economic issue, especially if you have a long-term horizon. Guys, I'm doing this for the next 40 years, so, you know, a pandemic, it sucks, but it's not going to take me out of the market. Oil issues, that just gives me a buying opportunity. So if you have a long-term mindset, you know, nothing's really going to be able to shake you as an investor. So buying power, we have $12.77 currently. Which that will be going up on the 30th. I'm getting paid by Altria, $130, and then on the 1st, I'm getting paid $82 by AT&T, so I should have over around $220 of buying power, which I will allocate towards Aflac stock, so I'm super excited about that. So next, we have realty income. We've got, to start off the portfolio, we've got 35 shares, $2,430.40 of market value. Average cost is $55.59. 7.36% of the portfolio is in realty income. Today we are up $350, up 0.14%. Total, we're up $484.60, up 24.9% on realty income, and monthly dividends coming in every single month for this stock. Then we've got my personal favorite stock in the portfolio being Coca-Cola. We've got 22 shares, $1,198.01 for market value. Average cost is $51.47. 3.63% of the portfolio is in Coca-Cola. Today we are down $3.30, down 0.27%. Total, we are up $65.79, up 5.82% on Coca-Cola stock. Then we've got Allstate, my insurance payer for this set of months. This is a auto insurer, which everybody needs legally, so I have no issue holding this long term. And they did like a 52% dividend raise. Was at 54 cents, now it's at 81 or 82 cents a share. So with that type of dividend growth and the business model that they have, I have no issue holding this long term, and I will pour money into Allstate. So we only have 6 shares right now, $742.38 of market value. Average cost is $105.88. 2.25% of the portfolio is in Allstate. That will be going way up, especially if the stock dips below my average cost. We're down 78 cents today. Total, we're up $107.32, up nearly 17% on Allstate stock. Then to finish out this set of months is Altria. It dipped. A lot of people have been asking me about what I want to do with Altria stock. I'm obviously not going to sell it. If I had the capital and it was the right month to buy it, I'd be pouring money into it currently. So I have no issue adding to this position, especially because it's way below my average cost. So right now we have 152 shares of this Dividend King, $7,191.16 for market value. Average cost is $52.17. 21.77% of the portfolios in MO, down $38 today, down about 0.5%. Total, we're down $733.87, down 9.25%, and a dividend coming in of $130.72. Then we've got AT&T. Ooh, at $31.40, been a long time since I've seen it above $30 a share. We have 171 shares, $5,370.26 of market value. Average cost is $29.70. We're up to 16.25% of the portfolio in AT&T stock. That increase in percentage is because the stock went up. We're up $221.44 today, up 4.3%. Total, we're up $291.06 $291.52, up 5.74%. Numbers are going to change because the market's open, but a dividend activity coming in. Dividend of $85.80, but that is wrong. That actually went up because we have 171 shares, so we're actually closer to $90 a share, or $90 for a dividend payment for AT&T, and that will be going up because I will not be buying it this month, but I will buy it before it pays me again. Then we have Procter and Gamble, one of my favorite consumer staples, actually my favorite consumer staple stock. We have one share, $134.34 for market value. Average cost is $136.98. 0.41% of the portfolios in Procter and Gamble. Today we are down 162, 1.19%. Total, we are down 262, down 1.91% on Procter and Gamble. Then we've got AbbVie. We got 60 shares of this pharmaceutical giant, $6,622 and around 80 cents for market value. Average cost is $72.22. 20.03% of the portfolio is in AbbVie. That used to be all the way up in like 24%. So that's been going way down since I've been adding and allocating more capital to other stocks. We are down $24 today, down 0.36%. Total, we are up $2,290.64, up 52.85%, and a dividend coming in on the 14th of May of $78. Then we've got Aflac stock, my favorite insurer. We have 103 shares of this Dividend Aristocrat, $5,479.60 of market value. Average cost is $49.12. 16.58% of the portfolio is in Aflac stock, down $33.99 today, which is ironic. That's the dividend that it pays me. We're down 6.62%, and total we are up $416.96, up 8.24% on Aflac stock. And as I said, all the dividends that I will be paid this month will be getting added or allocated to Aflac stock, which should be around $200, which should be around 4 shares of Aflac stock. So it should get us to about 107 shares of Aflac before the end of the month. Then we've got Hershey, another one of my favorite consumer staples. We have one share of Hershey stock, $162.36 is our market value. Average cost is $159.61. About 0.5% of the portfolios in Hershey stock. Down 58 cents today, down 0.36%. Total, we're up 275, up 1.72%. This, just like Procter and Gamble, is one that I want to add more to. I want to pour money into it, but it has to be at the right price. So I wanted to get it into the portfolio because I, of course, want to own it, but I want to own it at a better price. So I'm going to wait to cost down average on this stock, which it's gone up since I bought it. So I will not be buying Hershey's. So I'll buy Aflac for now and focus on that. Then we've got Enbridge, 100 shares, 3,007 of this Aristocrat, $3,716 of market value. Average cost is $36.28. 11.25% of the portfolios in Enbridge. I want every stock to be around 10%, so of course I'll buy other opportunities in the portfolio, and that will make this percentage go down. We are down 17.12 today, down about 0.5%. Total, we're up 88.13, up 2.43% on Enbridge stock. Next, we're going to look at the watch list, which I did add some stocks. I'm happy with the 10 stocks that I have, but I just think Eventually, once I get the percentages where I want to add more insurance and consumer staples and the utility that I've owned before. So I want to own Mondelez because they own a lot of the brands that I personally buy, being Oreos. They own Chips Ahoy, Teddy Grahams, Chicken and a Biscuit. They own Ritz Crackers. And they own Trident Gum, which is really what I'm after. The big things for this company for me personally are Oreos and Trident Gum. So at $59.53, I do not think it is a buy. I want to buy it closer to $50 a share. Then, of course, we have Chubb, which I've looked at before. It's one of the top 10 underwriters in the U.S. for insurance. I believe it's number 5. So at 168, and they are a dividend aristocrat too, and at 168, I don't want them. I want them closer to $100, so I'll be waiting on this for quite some time. Then I've got Alliant Energy that I will be buying back. I had 10 shares of Alliant Energy, shouldn't have sold it. Rookie mistake. I'm no longer going to be trading in and out of securities. Once I own something, I'm going to own it for the very, very long term. But at $56.96, it's close to its 52-week high. I want it closer to $50, so I'm going to wait on Alliant Energy as well. Then we have Travelers Insurance at $155.76. This again is in the top 10 underwriters in the U.S. Number 1, State Farm. Number 2 is Berkshire. 3 is Progressive. And then it is more private insurers with USAA and Liberty Mutual. And then Chubb and Travelers are in the top 10. So at $155.60, I do not want it. It's very close, again, to its 52-week high. I want this closer to $100, so I want this $55 off of the current price, which will take time. And then, of course, we have Berkshire at $270.46. Its 52-week high is $72.97. So, again, too high for me. I want this around the $200 mark, so $70 off of the current price. So, guys, everything on the watch list is overvalued, in my opinion. And so I wanted these stocks. I've looked at all of them. I've done deep research on all of these companies. The point of the portfolio is I want to get a couple more consumer staples, which would be Mondelez. And in my opinion, I treat Alliant Energy like a consumer staple because people consume electricity. They don't have an option on it. They have to. So it's a monthly expense that people have to pay. And then, of course, insurance with the rest of the options being Chubb, being Travelers, and being Berkshire Hathaway. So that will round out the portfolio with 15 stocks total. I will not be buying anything else. I want Mondelez for Trident and Oreo. I want Chubb because it's in the top 10 underwriters in the U.S. for property and casualty insurance. Alliant Energy, people don't have a choice. They have to pay Alliant, and because of that, I want it in the portfolio, and of course, I pay them myself. Travelers is in the top 10 underwriters as well, and they get premiums every month just like Chubb. And then, of course, Berkshire Hathaway is a huge insurance arm. They also have a huge footprint in the utility sector and now in the healthcare sector as well. They've bought big positions in AbbVie, in Merck, in Bristol Myers Squibb. They had a position in Pfizer, but they got rid of the big banks, and they replaced it with healthcare stocks, and that makes me want to buy a lot more. I'm a lot more bullish on healthcare than I am on banks long term. So, guys, the main takeaway from the portfolio is I'm going to be buying a lot of Allstate. Well, Coca-Cola, Allstate, Procter and Gamble, and Aflac. And then for the watch list, I'm going to be very heavy on Mondelez because I want Trident. I want gum, being Mondelez and Hershey. They are the two biggest producers of gum outside of Wrigley's. I want them to be huge in the portfolio. I'm bullish on gum and chocolate. And the other products that Mondelez owns. So I want those to be big portions of the portfolio. So really, I want the biggest footprints in the portfolio to be insurance first, then consumer staples. Those are going to be the big ones. That's going to be about 90% of the portfolio. So expect Coca-Cola, Allstate. I mean, MO is also a consumer staple. You can consider most of these stocks consumer staples, but the big ones are going to be Coca-Cola, Procter and Gamble, Hershey, Mondelez. Those four are probably going to make up about 40% of the portfolio, and then the rest are going to be insurance stocks, being Allstate, being Aflac, being Chubb, Travelers, and Berkshire. Excuse me. So that's the overall goal, guys. Focused on insurance first, and then consumer staples. So with that being said, guys, thank you so much for watching. We're getting really close to 520 subscribers, which is crazy. So remember to make sure to hit that subscribe button. I post Monday through Friday on my dividend portfolio here on Robinhood. And I also have been doing list videos. I did one on oil stocks. I did one on 10 stocks to buy for 2021. I have one for the cannabis industry, 10 stocks for the cannabis revolution. So I have a lot of list videos coming out, and I'm super excited about that. I also have another series planned talking the products of, so the products of Procter and Gamble, Coca-Cola, Dr. Pepper, Pepsi, Clorox, just any company like Unilever, anything that has a lot of products under its umbrella. I want to make sure that I bring that to my subscribers' attention because a lot of people don't know how extensive these brands are, and I want to change that. So, with that being said, guys, thank you so much for watching. Remember to hit the subscribe button, and when you do, hit the bell notification so you don't miss any updates. I post Robinhood portfolio updates Monday through Friday. I'm trying to diversify the content and give you guys more. I'm trying to get about 2 videos out a day. So with that being said, guys, thank you so much for watching, and I'll see you tomorrow with another Robinhood portfolio update. Take care, guys.